So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to answer the question, what is a price to sales ratio? So very much like we did yesterday on the podcast where we talked about price to earnings ratios or PE ratios, today we're going to talk a little bit more about price to sales ratios. So the price to sales ratio is basically what it sounds like. You basically take the share price of the company and you divide that out by the sales per share to get an accurate representation of how much money each unit of the company, each share price of the company is generating in revenue. And the reason why investors want to take a look at this as, again, one metric of many to determine if they want to make an investment in a security or a private company or an equity deal is because we want to know how much top-line revenue the company is generating and if their earnings are coming more from revenue growth or coming more from cost-cutting and optimization metrics. So oftentimes we see companies that have really good price-to-earnings ratios or a really good earnings report, but maybe when you start digging into it a little bit more, in particular looking at price to sales ratios, what you find is that the company actually lost revenue, but they cut expenses faster. So we see companies that have great earnings reports and they beat expectations on earnings, but those earnings were actually a factor of the company cutting costs faster, not necessarily gaining market share or increasing top line revenue. So again, it's just another metric that you can use to weigh your decisions when choosing your investments. So to use an example here, and what we want to see with a price to sales ratio is a low price to sales ratio. And the low price to sales ratio would basically mean that investors are paying less for each unit of sale that the company generates. So again, low price to sales ratio is generally better than a higher price to sales ratio. So let's look at the first example. Let's say that the stock that we're looking at is trading at $10 per share. And the sales for the company on a per share basis are $8 per share. So basically what we do is we take the $10 and we divide that by the $8 in sales per share, and we get a price to sales ratio of 1.25. Now, again, this could be potentially low for that industry or it could be potentially high for that industry. It's just one metric that we're going to use. Now, if we look at another company, and let's say another company is trading at around $15 per share, but is generating more sales per share than the first company we looked at. It's generating $10 per share in revenue. Then we take the 15 divided by the $10 that it generates, and we see that the price to sales ratio is 1.5. So on the top line revenue basis, yes, the second company is generating more money per share, but the stock price is so much higher that you are actually paying a little bit of a premium to invest in that company, company B, which is trading for $15 per share, over company A, which was trading for $10 per share. Again, this is just one metric that you can use, but it's a great way to kind of level the playing field and see which companies are actually generating meaningful top line revenue and are potentially growing their revenue over time before making an investment. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.